Everybody, Jason Reynolds here with Visions Realty Investments. Hope you're having a great week so far. We are going virtual right now, and we've got Terrie Goodloe with Service First Mortgage. How are you, Terrie?
Hey, I'm great, thanks. Thanks for having me today, Jason. I'm always excited to chat with you about things going on in our real estate community and business. So thanks for having me.
Yeah. So do you like my virtual background, me in my car?
Better than me in my home office.
Yeah. Well, I'm driving up to the office. I'm already running late, and I realized I forgot my mask. So I was like, well, I guess we'll just do the interview in the car, and then I'll go back and get my mask in these times that we have. So,
It's funny, the other day, and I was driving to an appointment, and I thought, do I have my mask? And so I looked, I keep it in the car, and I thought, well, if you didn't have a mask and you needed a mask, you couldn't go in a store to buy a mask because you wouldn't be masked. So it's a little bit of a challenge sometimes, could be for
I haven't
somebody.
thought about that. Yeah.
Do they have a
Crazy times.
drive-through mask purchase?
That's a
And
business opportunity for
it could
somebody
be a
listening right
thing,
now.
right?
No
Yeah.
longer ice cream trucks, just convert them to driving through and handing out masks.
Uh-huh.
All right. Well, let's jump on talking about mortgages. I wanted to have you on really mainly to see how the mortgage industry, is at the current time. It appears that interest rates are still low. Is that correct? On your
Yes.
side, are they?
Yes.
Do you think they're going to keep going down, or are they starting to actually come back up a little bit?
I'm going to say, in a historical perspective, I've been in the business over 20 years. I know it's hard to believe, but in my 20 years of business, I'm going to say, historically speaking, we see lower rates in the fall and in the early winter, January-ish.
Okay.
2020 is not typical.
Yeah.
So it's hard to say that we're going to follow suit with that this year, because rates have been at all-time lows through the spring, which usually, historically speaking, they tick up in the spring, level out in the summer, drop back down in the fall, lower in December, January, and then we see them kind of go back up in the spring, cyclical. So 2020 not being your normal everyday year, we have seen rates at their all-time lows, historical lows. I personally am refinancing my own mortgage now. Lots of people are refinancing. I mean, who would ever thought that would be beneficial to refinance a 4.5% rate in today's market? But, typically the first question I ask a client on a refinance is, what are your goals? What are your financial goals to do the refinance? Because I look at a bigger picture. So clients, are you cashing out? Or are you just trying to get a lower rate? And then the bigger question, how much longer are you going to be in this house? You're not going to be there 3 to 5 years. You're spending money, wasting money to refinance when you're not going to probably recover that expense if you're not going to be there. And we don't all have a crystal ball to know what our future holds, but I mean, people could refinance and then have to move or relocate with the company, 2 or 3 years later. But for the most part, they got to know they're going to be there for a little bit, or have a lot higher rate than what current is, to make it feasible to refinance and beneficial. Other than, if you're trying to get cash out to make improvements or pay off other debts or things of that nature. So I do an analysis with the client. What are the financial goals of that person? So we decide whether it's a benefit or not. Of course, the customer is the ultimate decision maker, and I lay it out on the line. Here's my thoughts, and you decide. And they usually will agree with me. Yeah, that doesn't sound like it makes sense to refinance at this time. Or, yeah, we're going to get cash out, so let's move forward. On the purchase side, wow, prices are increasing. Haven't really seen prices come down in real estate. You can talk more to that, I think. But what we see on my side is the competitiveness of the market in certain price ranges, good properties, well-maintained properties, properties in the, 190 to 250 price range. I mean, their buyers are getting, sellers are getting multiple offers. So the buyers have to be relatively strong and ready to move, ready, getting their paperwork to their mortgage lender. So me as a mortgage lender can call the listing agent and say, my buyer is well qualified and they have all their paperwork into me. I've reviewed it. They are ready to go. As opposed to, and I would encourage any listing agent, if you're getting multiple offers, you need to be calling on those pre-qual letters, making sure you can get in touch with that lender because, even though you have this great offer, if you can't get a hold of the lender, is that going to be a benefit in the end?
Right. Jumping back to the current market, one thing I read, and I'm not sure if this is a reality or not, is that they were thinking about on refinancing, Fannie Mae adding like a fee after the end of this month. Is that a reality? Is that going to happen?
That has happened. So
Okay.
we have seen, we got a communication from our corporate office last week that said Fannie's adding this half point to the cost, not necessarily the rate, but where what we call a par rate, if you're getting a 3% and no cost, now that 3% may cost 0.5% in discount to get the same rate. And what I was reading that specifically on refinances, I don't know that that's on purchased money. So we still, the right, but still, rates are still great.
Right. Okay, so that's, yeah, and I think when I read it, it was only on refis. So I don't think they're doing it on purchases.
Right.
So in terms of overall, it's pretty much the rates are great on conventional and FHA, everything.
Yeah, and more than once I get a call, what are rates? There are literally 14 factors that go into pricing a mortgage loan. I've, again, been in the business 20 years. 20 years ago, you call, what's a 30-year fixed rate? Well, it's this. There wasn't any disparity. There wasn't any change. You could buy the rate down. But now we look at loan amount. We look at debt to income. We look at down payment. We look at biggest factor, credit and credit score. So again, mortgage being based on risk as a bigger picture, the higher risk you are, then the higher rate you will pay. So low credit score is higher risk. Lower down payment is higher risk. So, to optimize the interest rate, 20% equity, low debt to income ratio, and high credit score.
Okay. Aside from, anything else, what I'll put in this show on the notes is how to contact you, because obviously there's a lot of steps if you're a first-time home buyer, things to look out for, et cetera. But in this current time that we're in, are there any like specifics for any new home buyers or any home buyers that you would recommend doing ahead of time in getting pre-qualified? Are say a Service First being more stringent on certain things from an employer to make sure that they feel confident, say that job's going to continue? Are there certain things that are pertinent now that maybe weren't a year ago for a first-time home buyer or somebody getting a loan that's important?
I think it's important to have, your money saved for your down payment. So depending on your loan program, so you would need 3.5% minimum down for FHA. VA doesn't require a down payment.
Right.
Conventional is a 5% down, and there are some programs that allow a 3% down on conventional. And if you have really high credit scores, then that might be a better way to go than FHA financing. Then you have closing costs associated with your purchase, and depending on the loan amount, the cost of taxes and insurance, you're looking at, I'm going to say, a minimum of $5,000 in closing cost, and up from there, depending on the price of the home. So on, $100,000 sales price, that's 3,500 down at 3.5%, plus 5,000 in closing costs. That's $8,500 on FHA. So know where your money's coming from. I get conversations with clients. Oh, I can get a gift from my mom or my dad or my grandma or my grandpa, but they haven't had that conversation with mom or dad or grandma or grandpa. And then they, fall in love with a house and they go ask for the gift money, and grandma says, oh, I don't have that anymore. Or no, I'm not going to give you that much. So have all your ducks in a row.
What?
Know where your money's coming from. Yeah. You want how much? So it's important to, have stable job, stable employment, stable income. So, commissioned borrowers. And more so now in the stranger times that we're seeing in 2020 is, are you still working? So, we can in some cases use unemployment, but we don't like to, because that's not forever.
Yeah.
You can have been unemployed during a specific period of time during this COVID, and as long as you've gone back to work, we can use your income. But that's a key question. Now, before, also with self-employed, we didn't necessarily look at current status. We looked at your tax returns for the last 2 years. But now we're having to get bank statements to show you're still operating and you're still in business.
Yeah, so, that makes sense. That's just pertinent for a lender.
Yeah, it's important to have income to be able to make that payment when you close. Yeah. Funny as it may seem.
Yeah.
Yeah.
Okay, well, good. Well, the purpose of this was to be kind of short and sweet and get a quick update. But one thing that I would love to remind clients is Terrie is a great lender, and you will, I have a lot of buyers reach out and say, well, when should I start looking, or how should I start looking? I always say, just call a lender and have a conversation. Even if it's a year out, you can get a roadmap for where you should start now to get where you want to be in the future. And so if somebody just wanted to visit with you about that roadmap and discuss what their options may be, how do they get a hold of you?
And I'm going to add to that and say, more importantly, last week I had a friend call and say, hey, we're looking at buying a house. I'm like, what's your credit score, you think? 800s. I'm like, great. I used that number that they gave me to kind of get an interest rate, and then they wanted to make an offer, so I had to pull credit. So when I pull credit, guess what? There was a small,
not 800, yeah,
medical collection charged to the co-borrower in December, which pulled the credit score down 100 points, which then in turn affects the interest rate. It affects the mortgage insurance, increasing it. So even though they had no idea there was a mortgage collection on the credit report, I would encourage you, even if you're looking a year out and just preparing, have the lender pull the credit and look at it, because things happen. Things pop up you're not even aware of, and they could cause some issue. So I would even say, in your preparation, have your lender. I've also had a client that had a, unbeknownst to them, judgment on their credit, which had to be cleared and taken care of. So if something pops on your credit you're not aware of, at least you know, and you have time to get it cleared up, rectified, taken care of.
Perfect. So phone number, how would they reach you?
I can be reached. My cell phone is 817-925-8306, or my email is tgoodloe@sfmc.com. We shortened our email. So Terrie, tgoodloe@sfmc.com. Be
Okay,
happy to talk
awesome.
to anybody.
Awesome. Well, thank you, Terrie.
Hey,
And
thanks, Jason.
any of you guys that have questions, feel free to reach out.
All
All
right.
right, we'll talk to you
Appreciate
soon.
it. Have a great day. Bye-bye.
All right, bye.